This morning, July 6th, Microsoft confirmed it. 4,800 people are gone. 2.1% of the company. The deepest cuts hit Xbox. 3,200 roles, a fifth of the entire games division, plus commercial sales and consulting.
Around the same time that Meta informed its staff that they're firing about 8,000 people, Microsoft sent their employees an internal memo. But they aren't laying off any more people. Instead, they're offering voluntary retirement to about 7% of their US workforce. This is the first time in the company's history that they've done anything like this.
If that feels familiar, it should. 9,000 last July. 6,000 the May before that. Same company. Same season. Almost the same week of the calendar. Microsoft doesn't have layoffs anymore. It has a season. And here's what makes no sense, until it makes perfect sense. This is happening during the most profitable era in the company's history. Last quarter, Microsoft earned $31.8 billion, up 23%, on $82.9 billion of revenue. Companies fire people when they're in trouble. Microsoft's profits are the opposite of in trouble. By the end of this video, you'll see exactly what those 4,800 salaries are actually buying. And I'll warn you now, the number is so small, it's almost insulting. The layoff isn't the story. What it purchases is. Stay with me for 60 seconds here, because this next part is the trick that makes everything else work. One piece of jargon this week, and it's the key to the whole thing: OPEX and CAPEX. Plain English, a company spends money out of two buckets. Bucket 1, operating expenses, the cost of running the business this year. Salaries live here. Bucket 2, capital expenditures, money that builds things that last. Data centers, servers, the machines. Wall Street reads these buckets very differently. Keep the buckets in mind, because what looks like a layoff is actually money moving from bucket 1 to bucket 2. Look at the pattern, because the pattern is the tell. Microsoft's fiscal year starts July 1st. May 2025, about 6,000 roles cut. July 2025, the day after the fiscal year turned, about 9,000, roughly 4% of the company, the largest cut since 2023. Xbox, sales, customer support. Tech press started calling it what it is, an annual July restructuring. This year, they even ran a voluntary retirement program first. The ritual now has a pre-ritual. And listen to how today's cut was announced. Microsoft's Chief People Officer, Amy Coleman, in the memo to employees. Our business is changing because the world around it is changing. Not, we're in trouble. Not, sales are down. The world is changing. The one executive who was blunt runs Xbox. Asha Sharma told staff, quote, "Our business today is not healthy." And Xbox took 2/3 of the cuts, with 4 game studios being pushed out of the company entirely. Remember that. Who gets cut and who gets kept is the whole story. Because notice what's missing from the corporate framing: any mention of financial trouble. There isn't any. So if the company's printing money, why does the calendar keep demanding bodies? Here's the other number Microsoft announced this year, the one that didn't get a season named after it. AI capital expenditure, about $80 billion last fiscal year. For calendar year 2026, $190 billion, a figure Microsoft confirmed at its April earnings, driven partly by soaring memory chip costs. That's not a data center budget. That's a Manhattan project with a login page. And it's being spent by a company whose AI business just crossed a $37 billion revenue run rate, growing at 123%. The machine is real. So is its appetite. Now do the math with me, because this is the part nobody says out loud. $190 billion a year is roughly $520 million a day. 4,800 employees at an estimated $200,000 each, all in, just under $1 billion a year in savings. Divide it out. Today's entire layoff funds less than 2 days of the AI build-out. 2 days. Microsoft did not fire these people because it needs the money. The money is a rounding error on the thing it's actually building. So the question gets sharper. If the savings are trivial, what is the layoff for? It's for the audience, not the employees, the shareholders. Here's the mechanism. Wall Street has one great fear about AI, that big tech will torch hundreds of billions on data centers with no payoff. This spring, Fortune's headline said it flatly. Microsoft, Meta, and Google all announced billions more in AI spending. And, quote, only Google convinced investors it's paying off. When a company spends $190 billion, the market demands to see discipline somewhere. Anywhere. A layoff is discipline you can announce in one sentence. So every July, OPEX comes out, margins hold, and the message goes to the market. We are not being reckless. Look, we're cutting. The layoff isn't a savings plan. It's a permission slip for the CapEx. And the people being converted into that permission slip mostly work in sales, consulting, and Xbox, the divisions whose costs don't feed the AI story. That's the real business model of the AI era layoff. The employees aren't being replaced by AI. Not yet. They're being liquidated into the budget that builds it. The people are funding the machines. Now, the honest version, because Microsoft isn't a cartoon villain here. The voluntary retirement program came first, and severance at Microsoft is real money. Some of this genuinely is reorganization around AI tools that change how work gets done, and no company owes anyone a job forever. The market didn't applaud this time. On announcement day, Microsoft's stock closed down about 1%. It's been sliding for weeks as the CapEx numbers grew. Financial press has it down roughly 20% of this year. For a decade, a layoff bought applause. Today, investors looked at 4,800 jobs, looked at a $190 billion build-out, and understood the math you just did. The permission slip is wearing out. Wall Street isn't asking for discipline anymore. It's asking whether the machine will ever pay for itself. Microsoft is showing us something colder. What a company will convert its people into when the machine it's building costs $500 million a day. One last detail from today for viewers of this channel's last two videos. Along with the layoffs, Xbox is pushing 4 game studios out of the company, spinning them off, independent. Now even Microsoft is shedding the businesses that don't feed the machine. The great unbundling isn't a media story, it's the story. So next July, when the headline comes again, and it will, it's on the calendar now. Don't ask how much Microsoft saved. You already know, about 2 days worth. Ask what the announcement bought and watch the buckets, not the bodies. That is the real business model. The $190 billion question, whether any of this build-out pays off, is its own story. And today the market started asking it out loud. Subscribe, that one's coming.